Call this meeting to order. Janet, you want to do the roll call?
Sure. Clark Castell,
Here.
David Johnson, sorry if I butcher anybody's names. Jay Purcell. Yeah,
John, I think John is muted.
I see Dave Johnson's coming on.
okay. Okay, Anthony Kolowski,
Yep, here.
Matthew Kolowski.
Here.
Okay. Richard Lavier. I just saw Dave.
Yeah, Dave Johnson is joined.
I'm here, present. Sorry.
All right. Yep. Okay, William Lakota,
Yep, Bill, that's me. I'm here.
Tim
Hey, Bill.
Mankey,
Here.
Mitch Page,
I'm here.
Sam Sharma. And I don't know why I keep. And John Slazarski.
Here.
All right.
Okay, we have a quorum?
Yes, you do.
Okay. The first thing is we're looking at health benefits.
Yes.
Okay, I'll turn it over to you.
Okay. My name's Dave McCluskey. I'm with Lockton. And we've been working with Janet and Lou and the Newington team on the renewal for several years now. And overall, we had a pretty aggressive renewal. It was everything was running pretty well. The town budget was the town was actually running better than expected, and looking at a small decrease in recommended rate for the next year, whereas the Board of Ed was running right on budget and came up with about a 2.5% increase. That's where we ended the renewal. Overall was about a 1%, little bit less than 1% overall increase for next year from a budgetary standpoint. Where we run right now, where we're running is the overall, the Board of Ed is right on budget at a 98% loss ratio. The target is to get to as close to 100 as possible. Right now, they're about $164,000 under budget. That's through April of this year. The town is running a little hot right now, and we're actually running a deficit position at this moment of about $317,000. That is a recent development, and I'll get into that in a minute. Overall, we're running under budget by $153,000, or over budget by $153,000. So the town and the board combined is a little over budget. It's a little over 101% loss ratio. The main reasons for this is when the renewal was done back in November, December, January timeframe. Both the town and the board were running very well. Well, the board was running about the same as what they are now. The town was running extremely well. Last year, The loss ratio for the town for the full year was 67.5%. Year to date, or where they year to date, current year, we're running at 110.8. But the first 3 months of the year, July, August, September, the loss ratio was in the 60s. It was 65, 57, and 48. Beginning in October, November, December, and January, the claims spiked up. So we were over 100% each of those months. They came back down in February and then spiked back up in March and April. So that's where what's happening on the town side. On the board side, there's some spike months, but overall they're being offset by the good months. So we're still pretty comfortable with we're going to be pretty close to 100% on that. So that's what's happening. Now, what's driving the new claims is we took a look at what was happening with regards to whether it was utilization, large losses, or a combination of both. And what we're saying is that both the town and the board have 3 claims over the stop loss of 175. That's not unusual. The town maybe, usually where we have 1 or 2. So getting into 3 that did exceed the 175 is a little high for the town, not for the board. The bigger issue, and Shannon, I don't know if you sent the slides over to everyone.
Yep.
We provided a financial summary. We wanted to look at the claim distribution to see what was happening. And there's a exhibit that says financial summary claims distribution.
You put that up, Janet, or?
I sent it over to everybody, and actually, Dave, you have access to the screen, so you can put them up if you'd like to.
I would love to, but I'm doing this on a cell phone.
I'll try to do it right now while you're talking. Just keep talking, Dave, and I'll get them.
If you guys have it in front of you, what we saw on that, the claim activity, is that there was a significant increase of the number of claims over 75,000 and under the 175 stop loss. Previous year we had 4 claims between 75,000 and 100,000, or 4 claimants that generated $300,000, $365,000 in claims. It's about 0.2% of your claims. This year we have 17 claimants in that category. It's almost a full percent of your claims, 1.5 million in dollars spent. For claims from 100 to 150,000, it went from 9 claims for about $1 million to 12 claims for about $1.4 million. So that's really where it was utilization over 75,000 that's driving the cost. And this isn't simple. Those claimants typically are not simply people utilizing the plan more. You've had some claims; those are some hospitalizations and some large pharmacy spends. So we're keeping what we've got. Lockton has a stop loss unit that has a large claim case management team that's keeping an eye on these right now to make sure that those claims, and Blue Cross is managing those claims as efficiently as possible. We don't think that other than 1 claimant that we're aware of, we don't think they're all ongoing, where they're going to continue to be large claims. So we think it's going to mitigate, but it may not. We're monitoring it now. That's what we know.
Hey, Dave, have we seen an increase in mental health issues or anything? I noticed a few of them down here seem to be mental health issues or depression. But I can't tell if it's different than it had been historically.
Historically, your group, I guess the short answer is it did go up a little bit, but historically Newington had a pretty robust mental health claim activity in the past.
Okay,
So it's not surprising coming out of COVID that we're
Right.
seeing more folks on accessing the mental health care. But I don't think that doesn't strike as an unusual situation for Newington.
right. Okay, thanks.
Hey, Steve, I'll ask another question, kind of following up on that without knowing. And 75,000, sure, that those are potentially some hospitalizations. Do you have anything on the impact of COVID over the past year?
We're looking into it. There were the issue that I have, and I can get you some more information. We did run some reports on COVID. You did have a spike, but the spike kind of spread over the 2 policy periods, so it didn't kind of look like it's the most recent information. So your claims are way down, especially on the board. The town. We were, for a whole year, we didn't see anything higher than 88, 89% all last year. So there may be more COVID suppression in the town than normal. We've seen it on both, not just Newington, but we've seen this go both ways with our municipal block and our commercial block. Is we've seen some groups that had a significant amount of what appeared to be COVID suppression, and then there was a spike, and we've seen the exact opposite. So there's not an easy pattern right now. But there's definitely looks like the town had some level of suppression, and then there were people started accessing the system, and once they got back in, some of them, or a significant number of them, ended up with hospital claims.
Actually, Dave, when I start looking at the high claimants and that goes down below the 75,000, you're not really seeing anybody that's got a diagnosis of COVID on there. So I guess I probably should have just looked at that before I asked you.
No, there was one. It's just, it may not be in this data, and it could have been from the previous period. That's what I mean. It could have been from the previous plan year when you had the larger COVID claim. Because there was at least one that was over 120, but that could have been over 2 policy periods, because we run on a July to July basis. But I don't think it's COVID that's driving the cost. I think that at least we're not seeing it yet. What we're seeing is that you had a reduction in cost over time, which may have been avoidance of care. And then we're seeing people accessing care, not for COVID, but
For other things.
just accessing care. And those claim costs have been higher than expected.
It's a little weird though, because you don't see any of the surgeries or anything that got put off. You don't see a lot of knee surgeries or back or things that look, people could put off. There are some, cardiac issues that people could have put off for a while, I guess. But I guess I'm surprised we don't see more of, stuff flowing through that was, care that got put off for a while.
Right.
Hey, one more question, Dave. In the exhibit where you've got on page 1 and page 2 for admin fees, it's showing 0.
We've
Am I just-
negotiated, past year, we negotiated with Anthem to credit 100% of the pharmacy rebates back to Newington. So they're giving that to you in a fee credit. And then at the end of the year, if the pharmacy rebates exceed what they've credited, then they'll send us a check. So we're basically getting it back all at once, or a little at a time, versus just getting a big check at the end of the year.
Okay.
They're still charging for it. We're just getting it back. They didn't give it away.
They're charging a PPM, right?
Yeah, they're charging well, right now they're not actually. What they did was they gave us a per employee. They basically gave us the same PEPM. It was a flat PEPM year over year. But we just took 100% of the credit to offset it. So you're not paying it each month.
No, I
It's
get that part.
basically-
What is the PPM that's out there?
Just a sec. May not be in the renewal. I may have to get back to you on that one.
Okay.
Overall, the retention and managed benefit fees work out to around 93,000 a year that we've budgeted for that.
Thanks.
Any other questions? Is there anything else,
I
Jan?
guess I do have one last question,
Yep,
and this,
go ahead.
Dave, this might be speculation. What are you expecting for a stop loss renewal, given the activity that was on there, showing on page 4?
We've locked up a 9% renewal increase right now. We had negotiated it early. You actually do have one potential significant RX claim that's coming up. I think it has there's a specialty med that could be about $250 a year that Anthem's aware of, that was not identified when we negotiated the renewal, but they held the rate at 9. So we were able to keep them from increase. They wanted to go 40. So we got them to stay at the 9. We'll see what happens with your large losses over the next 6 months. We won't have to worry about it until next renewal.
Okay. They're not going to laser that individual, are they?
Nope. We got no laser and a 9% increase. That's locked in for this year. Next year, we'll see.
All right.
We'll be
Thanks.
doing we expect that we're going to be doing a full marketing and looking at all the markets to next year to make sure that we're not overpaying for stop loss. But that depends on what happens with those claims.
Dave,
Makes
was the
sense.
question on administrative fee, what was it before the offset to the RX rebate? Was that the question that was asked?
What's the the per employee
So-
per month number?
So the per contract per month was $49.84. That was offset by the RX rebate.
You said 49.81,
$49.84.
84. All right. Thank you.
You're very welcome.
Any other questions?
One quick question. What does that mean when they laser? What was that term laser? I just don't understand that term.
Dave, you can do it, or I can try.
I can do it if you don't mind.
Keep it simple.
If you have a stop loss at 175,000 and they identify someone that's going to have $1 million claim, they might increase the stop loss on that individual to say 500,000 or 600,000 in order to keep your premium level lower. That's
So
a laser.
sort of separating it out from the
Yeah,
herd, if you will.
Yeah, they identify one person or two people that have a significant claim.
Yep.
And instead of increasing the stop loss on the entire group or the trigger point on the entire group, they just increase the trigger point on that one individual.
Okay.
So it would increase Newington's liability on that one individual, but it'll
Not
keep
the whole
your
group.
premium rates lower on the rest of the group. And it's basically, you're going to have one large claim. You just
Okay.
have to fund more of it to keep your premium dollars down.
Gotcha. Thank you.
But there's no lasers in any of that's not happening right now.
Okay.
Clark, did you have a question?
Yes, could you remind me what the cost of the stop loss is? What percentage of the premiums?
Stop loss is, what I have in my thing is about 600,000, 617,000 is what I have budgeted.
Okay, no, that's fine. That's all I need. I just wanted to get my bearings. Approximate figure's fine. Thank you.
Any other questions? Okay, Gina, I assume we'll have another meeting sometime in the fall. Now that we can sort of meet again.
We have down on the list to schedule another meeting as item number 6.
Okay, good. Okay,
Well,
thanks, you
Janet
folks.
Janet, as always, just let us know when you need us.
Thank you, Janet. Thank you, everybody.
Thanks,
Thank you.
everybody.
everybody.
Okay, I can't see the agenda. Do you have the? Pull it up here. I assume the benefits is the next on the agenda, right?
Yes, it is. Next up is UBS.
Okay, that's what I figured. Okay, I'll turn it over to you folks.
Okay, well, good evening. I'm Mark Shigoski for the newer people. I want to say hello to, I guess, Tim, John, Janet, Clark, and Lou. I guess we all have worked together in the past.
Yeah.
So, you know what we do, but if it's okay with everybody who knows us, if we can take 3 or 4 minutes so everybody else can know who our group is. I'm Mark Shigoski with Princeton Institutional Investment Consult, Princeton Hartford Investment Consulting. We have an office in Hartford and one in Princeton, New Jersey. Ashley's out of the Hartford office. We've had the privilege of working with the town of Newington now for a number of years. And we've had some very good years in the markets. Obviously, this year is a little bit challenging, to say the least. We'd like to make the meetings collegial for the people that know us in the past, ask the questions as we're going through it. We have a lot of material. One of the other things you should know is our group has been named by Barron's, which is one of our periodicals that is big on Wall Street, as one of the top 20 institutional consulting teams in the United States. That should give you some comfort. Also, for those that are newer, if you want, you can give us your email and we can send you our thoughts on a weekly basis or a couple times a week. It's not inundating you, but I think the important part there is that we don't walk into this meeting and say, this is what we think we need to do. This is what's happening with the markets. As the weeks go on between the meetings, you'll receive emails from us and they're not UBS research. We've been doing this for almost 40 years plus. We have contacts around the country and around the world of different research areas and hedge funds and different investment people. So we share what our thinking is. So when we walk into the meetings, you have an idea of what's going on. Also, that starts people thinking, and we'll get phone calls from members of the board asking questions or telling us what's going on in the local economies. And that gives us a different way to look at the markets also before we come into the meetings. So we welcome that. For me personally, this group has been set up as a multi-generational team. As you can tell, I'm the youngest on the group, but the markets have been hard on me this year, so it aged me a little bit. Okay.